Our next guest is someone that is with Ativar Portugal since the beginning. In fact, we have done lots of work with them along the last year. And also, well, it's someone that we are proud of having working with us. Is called Alexandre Barbosa, and is going to give us a little feel about well, how to build and grow international startups. Okay, so welcome, Alexandre, and thank you very much to be with us. Okay.
Well, good morning, everyone, and thank you so much for having me and for the invitation. We have sort of a slightly tight schedule, so I guess we have 10 minutes to cover the simple challenge of how to build and launch global startups. So that should do it. Well, just to give you a couple of heads up on what I would like to cover. Given that we are facing, as the main topic of today, global businesses, building global companies, and how to become international, and the relevance of building Lisbon and Portugal as a central hub to this dynamic in Europe, in European venture, I thought I should give you a quick overview of how we've been fortunate to work with some of the most successful founders in South Europe and in London over the last 3 years, and what we've learned so far over the course of these 3 years to sort of have the opportunity to share some advice on how to launch global companies. Faber is a pre-Series A investor in technology venture. Faber means maker, and we do get excited about ideas and creative concepts for new businesses, but we are mostly driven by the sake of execution and by the willingness to make things happen. We are also a startup in the VC world. As investors, we have been investing for 3 years so far, and our clear ambition is to become one of the best investors at early stage, offering value add on top of capital at a micro venture capital scale from Iberia in helping founders build global companies that can become category leaders anywhere in the world. And we've been doing this, and we've been starting our investment thesis or our investment approach based on 3 key pillars. One is we are willing to invest in great people who have the large ambition to transform the way we live and the way we work. And we also do get excited about investment opportunities into higher level software platforms. That's our core. It's software and technology venture that serve clear audiences to solve clear problems with superior products. And third but not least, using and leveraging digital distribution as one of the core levers to scale very fast and tap onto larger markets where the large customer pools and potentially follow-on investors are at. We do this by offering a unique platform of product skills, product capabilities, business operations on top of our investment management skills. And we do it from pre-seed stage, where we work alongside founders from idea to market. And that means sometimes working with a founding team in going from an initial concept and launching a minimum viable product or a beta stage company in 3-4 months. That means not only co-developing products, it means building teams and launching their businesses. We also do invest at seed stage to work with great founders in launching their companies, launching their products, and scaling the initial 2 years of their activity. And sometimes we do this by investing at post-seed stage. That means that companies already have an initial traction, some initial validation from the market, but they can leverage our network and the way we can work alongside other investors and other partners in accelerating their growth towards a larger round of financing. Over the last 3 years, we've been, as I said, very fortunate to have the opportunity to invest into 19 companies. That means we found 19 great founding teams we believed in across Portugal, the UK, Belgium, Germany, and the US. At seed stage, we've always co-invested with other investors, with the most active investors in Portugal, with some of the most prominent investors in the UK, and most recently in Germany. And we always tend to follow on as co-investors at seed stage once we invest previously at pre-seed stage. And the portfolio spans a series of companies, some of which you might know. I won't mention many of them, but our portfolio, given our focus on internet companies, digital distribution, and network effect platforms, it's pretty much around mobile-first companies, mobility, software as a services, and cloud-based companies for B2B software, and online marketplaces. And the interesting learning so far is that we started by investing into companies that were born in Portugal, and that is pretty much half of our portfolio so far. And those 9-10 companies were born global from day one. And most of the companies that keep operations, product, engineering teams in Portugal very successfully started building their go-to-market teams around sales and marketing, either in London or in San Francisco. And so you have companies like Codacy or Unbabel who have their engineering teams predominantly in Lisbon and front office operations in San Francisco. Or you have Chic by Choice, high-end fashion rentals platform for lady dresses that built their whole platform, their whole product, their operations team in Portugal, but from day one launched on stage at Decoded Fashion in London. The CEO pretty much spends half the time in London. The marketing operations are in London. And their two main markets in Europe are the UK and Germany. The same with Hole 19. The company started in Portugal. 95% of their resources are based in Portugal. They went through Seed Camp in the UK and then pretty much launched around the world and using obviously app stores and the web for digital acquisition of active users. And this is pretty much how we believe in cross-border investment. And this is a key a crucial point when you actually want to launch a company that can have the potential to become a global category leader in a particular industry. It's not enough to be willing to fly onto London or San Francisco. You really do have to attract into your dynamic, into your company, the right partners, the right co-investors, the right team, to actually be able to have your place in the sun, be it in Europe or in the US or in anywhere where your large markets are, so that you can very quickly grow and become an eligible candidate to lead a particular industry. So when you think about building and growing global startups and what can make or break a company in the first 2-3 years, because that's predominantly the life cycle period where we specialize, there's an interesting combination of founder thoughts versus investor thoughts. And they actually have to combine to work together and make a successful case. So whenever we start, we sit at the table and talk to you founders and all the entrepreneurs, be it in Lisbon, Berlin, London, or the US, it's pretty much around, during the first year, you're concerned around product issues. You're excited about the technology you're developing. You're excited about the product you're building. You're completely obsessed about raising capital. And typically, you're concerned about the tactics and the priorities in going to market. Be it around the business model challenges in terms of monetization and revenue generation, be it in terms of distribution channels and how to tackle commercial challenges. But please do keep in mind that investors have a very different set of concerns when they sit at the table with you for the first time. Investors think of multi-stage investment cycles. That means that whenever they face the opportunity of deploying capital into a company, they start thinking about how that capital will, even if only on paper, multiply over the runway of 12, 24 months onto the next stage. They also are concerned about the time cycle of seed to exit, which on average, even in the most liquid markets, like the US, takes on average 6 to 8 years for a liquidity event to occur. They are concerned about investor returns and the life cycle of their funds. So imagine that you find the right partner for investing in your company, and it's a small fund, say $50 million fund. It's a completely different challenge for portfolio economics and for fund economics for an investor to sit down at the table and say, okay, so I'm deploying 1 million into this company. Is this company, over the course of the next 6 to 8 years, going to pay back my whole 50 million funds with an interesting return on equity for all my investors? And that's one type of challenge. The other type of challenge is if you're managing, as an investor, $500 million funds, then you'll pretty much be haunting and chasing unicorns every day of your life, because unless you find a couple of them, you won't be able to return your funds in any given useful time. So investors also worry about beating the odds. I mean, in a given portfolio of companies, hopefully you will be the ones that will beat the mortality rate of the rest of the portfolio. So you will be the 1 or 2 successful companies that investors find that will be able to compensate for all the write-offs and downside that they will have as investors. That's pretty much the unicorn dilemma. So are you the one company that is going to become a multi-billion-dollar company worldwide and pay back my investors for all of the write-offs that they will have with the downside in the remaining companies of the portfolio? And there's obviously an issue of thesis and focus. So if I'm a specialist investor in internet companies, I won't invest in life science startups, but also in a given space of thesis, say internet or digital venture. If I'm a specialist in software as a service and B2B software, I'm less comfortable in discussing a B2C e-commerce local play. And therefore, depending on whether or not you're chasing investment at pre-seed stage or at seed stage, you have to understand that investors will have to discuss with you not only if you're chasing a real problem and offering a practical, effective solution for that problem, but also how large is that problem? How big is that problem? Is this problem going to affect millions of people or hundreds of companies? And is this problem big enough to justify that I will invest into a large company? Investors also want to find the right team, not only the creative team that starts a product and launches a company, but also, are these guys the ones that will grow the company from 5 people to 50 people? But is this also the management team that will grow from 50 people to 500 people and become a 100 million, 200 million revenue company? When investors look at you as founders, they want to make, as much as possible, comfortable decisions in managing risk. So they always try to find proof points of your traction, market validation. At pre-seed stage, is it the early beta results from your project? Is it advisors attached to your project? Is it market validation from a concept perspective? But once you start launching commercially, it's about data. It's about metrics. It's about quantifying everything you can as product performance and customer engagement and user engagement. So it's month-on-month growth, it's monthly revenue, it's cohort retention, user retention, segment retention, and that's all around the metrics that matter for investors to believe that your product is actually more successful in attracting and retaining users than everybody else in the marketplace. And then it's about business model. It's not about certainty around the business model. It's about options around the business model. And the options that you pursue and the approach that you have in terms of monetization and revenue generation, are those scalable? Are your operations scalable? Are you thinking about your company in a scalable way? Because if you're not, even if you successfully charm and engage with international investors for the next stage investments, you won't be able to grow your company and make it as elastic as it has to be to actually tackle new markets with a given operating model. And there has to be something proprietary and unique around the company, or else you won't be able to differentiate. And what happens in Lisbon today is happening around the world, across hubs, across entrepreneurial hubs, in every accelerator, in every incubator. There's potential talent everywhere in the world. So about starting in Portugal and growing global, there's obviously always the question, why the hell Lisbon? Why the hell Porto? Why the hell Braga? Why the hell Coimbra or Aveiro? How can we start a global company from Portugal onto the world? Well, it doesn't have to be a disadvantage. We are center stage in a worldwide scenario of entrepreneurial willingness to build companies. And especially in Europe, I am not sure whether we will become one of the top hubs in attracting people or building Portuguese startups that will become global champions. I am much more confident that we will be able to become the European gateway for the highest potential talents from anywhere in Europe to get the right terms, right conditions, and start from Lisbon anywhere into the world. How are successful companies doing that? I mean, with every software platform, you need a strong backend and an attractive, usable front end. So on the backend side, successful companies like the ones we've heard before and the ones we have been fortunate enough to invest in have been building very strong back-end operations in Portugal. That means product, that means operations, engineering, even UX, UI, and design. The local ecosystem, as you can see, is more than ready to help you start, from accelerators to angel investors to institutional VCs. Talent is outstanding, but above all, it's not only about lower wages or longer time to live. It's about finding the right environment for your team to strive across the first 12 to 18 months of life of your company. And that means sometimes also keeping your highest talent under the radar for those people not to get poached by the Facebooks or Googles of this world, but also to have the opportunity to tap, as Miguel was saying, into the equity upside of one of the successful companies in the next few years. Even for the highest talent, it's a battle out there, not only for companies to find the best talent, but also for talent to be able to enter into the highest potential companies, get a pool of the stock options, and be involved in the upside cycle in the near future. And front end, it's about getting on the plane and going there. It's not about launching in Portugal, validating your business model in Lisbon or Porto or Braga, and then getting through the internationalization process. I don't even know what that means, to be honest. It means starting your team, getting your team to work in Portugal, and launching from day one in the largest market possible, either in Europe, in the US, or in any emerging market. That means not wasting the first year in trying to get early traction in Portugal. It means investing into the first year to become one benchmark in the UK, in Germany, in France, or even in the US. There's no reason why a software-based company can't be operating from Portugal and commercially launching in the US from day one. That means be willing to spend some fair time on planes, having to manage distributed teams from Portugal to London to San Francisco. We have very successful examples in our portfolio. We've been investing in London-based founders from anywhere in Europe, companies where we co-invested with UK investors that then successfully extended their engineering teams and operation teams to Portugal because we were involved, and then set up an extension of their front office teams from London to San Francisco, and are now managing a three-pronged distributed team to leverage the best of three worlds. That is happening with most of the dynamic and active teams around Europe. But at the end of the day, it's pretty much about attitude. The most successful founders we've been encountering over the last 3 years have three very clear attributes. Clarity of purpose. Clarity of purpose really helps you focus on what matters and manage priorities. If you're aiming at a higher end vision, never forget your higher end vision, but never trade that vision off with less focus on execution. It's really also about boldness. I mean, your initial courage, your creativity, and coming up with a product where you deeply believe in is also a very relevant attribute that you have to sustain across the first 2, 3, 4 years of life of your company. Those are the most challenging phases. Once you get to Series A, Series B, you're pretty much on the track of scaling up, but you've found what you've been looking for in terms of product market fit and how the product engages with end users. And at least from our experience, the highest differentiator across the board between companies is velocity. In internet speed, if it's not only about being very different from the company next door or finding the best color or the best UX feature for your products, it's really about moving faster and executing better and most effectively. So we've been listening to Venyam, we know Talkdesk, we've heard Miguel from Uniplaces. We have a couple of examples in our portfolio: Seeders, Codacy, Unbabel, Chic by Choice, Whole19. All these companies have started globally from day one, regardless of where they originally triggered the idea. And investors around the globe have been investing into these companies: Portuguese investors, European investors, US-based investors. These companies have more than 80–90% of their commercial business outside of Portugal, in some cases 90% outside of Europe, and 90% of their resources are based in Portugal so far. So the question is, who's next? And you should really leverage the momentum of Lisbon and Portugal, but don't, as a final note, don't take the Web Summits for granted. It's a huge opportunity for the country, but it's, in my humble opinion, by far more a responsibility for all of us than an opportunity, because we can't get distracted. The Web Summit will come and go. It will hopefully have a very positive impact, but you can't expect the Web Summit to make Portugal a more attractive place to start commercially a company. Forget about it. You have to start in Portugal, but launch commercially anywhere where the largest pool of customers are and where you're getting closer and closer to the large and later stage investors that will also work with you and back you up across the life cycle of the later stage company you're building. Thank you.
Our next guest is someone that is with Ativar Portugal since the beginning. In fact, we have done lots of work with them along the last year. And also, well, it's someone that we are proud of having working with us.
To work with some of the most successful founders in South Europe and in London over the last 3 years. And what we've learned so far over the course of these 3 years to sort of have the opportunity to share some advice on how to launch global companies. Faber is a pre-Series A investor in technology venture. Faber means maker. I would like to cover. Given that we are facing, as the main topic of today, global businesses building global companies and how to become international, and the relevance of building Lisbon and Portugal as a central hub to this dynamic in Europe, in European venture, I thought I should give you a quick overview of how we've been fortunate of... Well, good morning, everyone, and thank you so much for having me and for the invitation. We have sort of a slightly tight schedule, so I guess we have 10 minutes to cover the simple challenge of how to build and launch global startups. So that should do it. Well, just to give you a couple of heads up on what
is called Alexandre Barbosa, and is going to give us a little feel about well, how to build and grow international startups. Okay, so welcome, Alexandre, and thank you very much to be with us. Okay.